everyone. My name is Kate. I'll be navigating this discussion. So while we're still gathering, I want to thank everyone for joining, and I'll quickly introduce what we are going to talk about today. So today's topic is a highly fragmented and fast evolving payments landscape in MENA region. And we have our experts, our panelists, who will be introducing us to both market side and infrastructure side of launching and of exploring payments in the region. So please meet Anastasia Brenner. She is Chief Commercial Officer of white label payment software provider Akurateco, and George Salem. He is a board member of TESS Payments, a dynamic fintech and licensed payment service provider in Qatar. So as I've said, we will cover both market perspective and infrastructure and technology perspective, and Anastasia will cover the latest, and Georges will tell us how things are operating in the market. So we basically you will get this solid knowledge from the experts of how to approach local challenges, infrastructure, technology, regulations, all of that. So let me thank you again for joining this discussion, and let's begin. The first question I want to ask George. When you hear that the companies they say that we are expanding to MENA region, what do you think they typically misunderstand?
Well, good morning, everyone. Thank you so much, Kate. And I would like to thank as well Akurateco for organizing this webinar today. So it's an opportunity for all of us to discuss the MENA landscape payment market, and then shed the lights on some use cases, and then provide some guidance to the audience today. So in my personal opinion, it's very difficult to approach MENA as one market. And I always tell so many fintech founders that avoid approaching MENA as a single market, because the Middle East and North Africa constitutes multiple jurisdictions, and each jurisdiction has its own regulatory framework when it comes to the payment space. So if we take a live example, for example, in Qatar specifically, since we operate in the Qatari ecosystem, so the company I represent today, TESS Payment, started the operation as a payment gateway service provider before Qatar Central Bank availed the regulatory framework, the payment service provider regulatory framework. So we started our operation in 2018, 2019, and then the regulatory framework for payment service provider saw the light in December 2021. So we had the chance to understand what the regulator is trying to achieve at a fintech ecosystem, and then do the right positioning. And then we kept in mind the potential exportation of our business model to neighboring jurisdiction by understanding the competition landscape in other jurisdictions, as well as the regulatory framework in other jurisdictions, because we cannot predict that what's applicable in Saudi Arabia is going to be applicable, or is applicable in Qatar, and vice versa. So building on this context, you must have your expansion plan country by country. You cannot consider a full-fledged approach. And then what has happened in the past 4 years, let's say 4 to 5 years since Qatar Central Bank launched their payment service provider regulatory framework, So today we're somehow celebrating the 4th anniversary between TESS payment and Akurateco. So it was a partnership, despite having a co-building solution with Akurateco. I don't want to call it a white labeling solution, because white labeling, if you dive deep in it, it's a co-building at the end of the day. So this partnership, because it was shaped around the PSR regulatory framework of central bank, had all the chances to succeed. And then when we talk about success, we talk about impact. So because we were focused to understand the data residency protocols in Qatar, and the hosting services, the infosec of the central bank, the capital requirement, all the elements of the regulator, we managed to strike the right partnership with a technology enabler like Akurateco, and then give TESS payment, which is a regulated licensed, which is regulated and licensed PSP in Qatar, all the success element to leverage on its partnership with the merchant, and then even some telco companies, mainly in Qatar, and then hopefully soon beyond Qatar. And then because of that alignment between technology enablement and regulatory framework, the company managed to do the impact which everyone can sense in the market.
Oh, well, great. Thanks a lot. Thanks for like introducing Akurateco as well. And I also want to ask Anastasia, like from the like technology provider side, what like key lessons have you learned from working in MENA region and supporting TESS specifically?
Good morning, everyone. Thank you very much, Kate, for the questions and for hosting this webinar. Thank you, George, for your introduction and such good words about us. In the beginning, I remember when we just started partnering with TESS, it was a bit bumpy because we were both knowing each other and exploring how we can help each other grow. But once we started, it really helped in the beginning, the upfront kind of positioning of our relationship. So you had clear understanding of what requirements you had from the regulatory point of view, from the technology point of view, what you're expecting from us. And that helped us cover it for you and basically help you with receiving your goals, and also for us to growing in the market and understanding it better. To add about MENA in general, so there is no such thing as MENA license. So if any company is planning to enter or scale in MENA market, you have to understand that every market is so dispersed, is so different. And every time you have to go through the regulatory flow in every country you're planning to scale and the local setup. Usually, most of the countries in MENA market require local setup, either cloud or bare metal or something in between, but it has to be within the country. Some licenses might allow you to work without the local setup for some time until you grow to a certain point, but you'll still have to do it eventually. So kind of always plan accordingly to where you're planning to grow. So understanding your roadmap in terms of which country is first, which is next, how you're planning to scale, how many acquirers you're planning to have in each of the market. Also, it's important to understand what alternative payment methods, because you have to provide all the applicable, all the available payment methods that merchants and payers are expecting. Otherwise, you'll not be competitive in the market. And scale as you grow, be persistent, and build relationships in the markets, because this will help you eventually.
Well, great. Thanks, Anastasia, for introducing like this Akurateco point of view. And so, yeah, I guess the key takeout from here is like to understand that MENA is not a country, and you have to approach like each country differently and take into consideration different payment methods, different regulations. And from that, I want to delve deeper into the like regulation side, and I want to ask like George, as like an expert from the market, like we like often like fintechs, PSPs, they see like regulation as some kind of barrier to launch. But can it actually be like not a barrier but an enabler? And yeah, so how do you see this this approach?
Thanks, Kate, again, and thanks, Anna, for your reflections. See, Kate, this is a very important question because I've been into coaching and mentorship for many fintech startups, especially in the past 4 years. And then so many fintech founders used to approach me claiming or sharing their concerns about regulations. So my unified message to everyone is simple. Regulation is not a barrier at all, and that regulation, especially by central bank and financial regulators, will never be a barrier, especially in ecosystems within the MENA region, because normally the regulator is always accountable to push forward strong regulatory framework. And then when we perceive those regulatory framework, we always realize as subject matter expert that the main three elements or the main three objectives of these regulations is to ensure fair competition. And then when there is a fair competition, then this is in the favor of the fintech service provider. And then number two is to protect the ecosystem, because at the end of the day, someone has to be accountable for the protection of this ecosystem. And then number three, I always look into a regulatory framework as enabler to innovation. And then at the end of the day, it's an innovation game. So if we take, for example, the ecosystem constitution in Qatar, and then why Qatar? Because Qatar is evolving fintech ecosystem, though it's a small ecosystem, and then it's a launch pad. So, for example, initiatives like Qatar FinTech Hub helped approximately 80 plus, maybe close to 100 fintech startup, not only from the MENA region, from different jurisdictions across the world to consider Qatar launch as a launch pad, and then evolve from Qatar and then beyond towards neighboring markets, and then even deploy some proof of concept and then MVP with financial services sector champions. So the central bank is always recognized as the only regulator in the market. And then an initiative, for example, like Qatar FinTech Hub is a sector developer, or an initiative like Qatar Financial Center, which is a free zone, is always meant for licensing. So yes, regulation is important. Regulation is not a barrier, and the regulation will never be a barrier, especially that comes from the custodian of the ecosystem, which is primarily the central bank. However, the regulator by itself and the regulations alone will not be of help to especially fintech startup and then fintech founders. So you need different player. You need a sector enabler. You need definitely, which is a high priority, and it's a must in every evolving fintech ecosystem. You need a VC support. So you need venture capital to be there to connect with those founders and startups, and then deploy the necessary pre-seed funding, seed funding, Series A, and then beyond Series A funding, because at the end of the day, you cannot unlock and then enable innovation as strategically positioned in those regulatory framework without having someone who's sitting with deep pocket to enable those fintechs. So these are my reflections on the necessity of having the right regulatory framework.
And to add here, if I may, I absolutely agree with you. But in the end of the day, market has to be protected, has to be safe, and regulatory function is to do that. But also regulators following their own agenda. So for startups, that means they have to be flexible. They have to have in the pocket at least 5-7 backup plans, so A, B, C, D, whatever it takes. And at the same time, they should never stop building relationships in the market, because when conditions shift against them, those relationships and this readiness can make it better for them, can help them prosper?
Absolutely, Anna. And then before we conclude on this topic, so the key, in my personal opinion, is alignment among all the stakeholders. It's never about avoidance, alignment, and it's always alignment. So imagine a very nascent ecosystem with a fintech strategy, and then normally the fintech strategy comes before the regulations. And then this is the case also in Qatar. So our journey goes back to 2018, so 8 years ago, when we first developed the national fintech strategy in the country. And then the main custodian of this national fintech strategy was the central bank. And then when this strategy got completed and then submitted to and then shared with all the stakeholders, the regulations like payment service provider, buy now, pay later, crowdfunding, so on and so forth, were some initiatives that resulted from this strategy. However, in any ecosystem, having a national fintech strategy is a key, because you need to understand what are the ultimate and strategic objectives that this ecosystem is going to achieve over a span of 5 years or maybe seven years down the road. So once your strategic objectives are clear, then it will be easy for you to start developing the relevant regulatory framework and the licensing framework. And then with the support of different stakeholders, whether incubators or accelerators or venture builders, or even technology enablers like Akurateco, then the mandate will be more and more easier in terms of execution, because you need all the element of the puzzle in order to get to the licensing. And then instead of being afraid of what's in there in the regulation, I guess fintech founders and CEOs of fintech startups should be more keen to understand the value proposition of each and every regulatory framework. So the primary focus is to understand what's in this regulatory framework, and then how I can position myself according to the payment service provider regulations, for example, since the topic of today's webinar is mainly payment. And then as we start shaping the fintech journey, the objective for the fintech startup should be clear in terms of positioning in the market, and then what's the potential market percentage my envisaged startup can achieve. So, for example, if we understand that this market has a value, for example, just a number of $10 billion, then I need to understand from day one where I'm heading. So if I'm heading to cover 5% of this market share over a span of 3 years, let's say, then my technology has to be designed and developed on that basis, right? So I need to be probably the number 3 PSP provider or the number 3 payment gateway service provider in the country. So it's not necessarily in this case for me to build a fintech that will become a regional fintech. Then I would admire that someone is building a payment gateway to serve a local market and then to get 5% of this local market. If the dream is bigger, then the engineering of the solution and the identification of the technology enablers, who are definitely going to be the partner in success within this specific case, will be definitely identified and screened on that basis, that it's a big dream. It caters for 50% of market share, maybe domination in the market share, so on and so forth. And this is what some of the founders missed at day one. So again, going back to our point, the alignment is a key, and then this alignment has different streams: a regulatory alignment, a technology alignment, an ecosystem alignment with the VCs, with incubators, accelerators, and venture builders.
Yeah, so honestly, there's so many options in the market. When companies just starting, they can build in-house, they can buy source code, they can white label, they can partner with someone and be the business side when they can do the business. There's so many variations of how this can go. So of course, I absolutely agree. You have to start with understanding where you're reaching, because by knowing where you're going, you can kind of build all those steps necessary to reach that point. So are you going to spend 2 years building in-house, or are you going to buy a source code of some other products and then open it and see that you have to at least hire like 50 people and spend half a year to build functionality that you actually need, not just like some source code of MVP or whatever. Then you have to understand that while you are doing all of that, some other companies are already starting and building and offering their solution and already conquering the market of your potential merchants. And if you're not understanding what your merchants need, and by understanding, I mean you have to figure out, are you going to cover like all of the merchants on the market, or you will start with specific industries first? Let's go marketplaces, then let's go parking, let's go e-com, whatever you have in mind. But you have to understand what they need, and in order what you have to provide them in order for them to be interested in what you're offering. So it's a long process, but if you build it right, if you understand what you want to reach ultimately, if you have a good technology that can support you, it'll be fine.
Well, thanks a lot for this extensive reflections of your polls. And yeah, so I think if I were to launch my PSP, I would definitely fear less about like this scary word like regulation. Yeah, so it's really like George has rightly pointed out, that it's more about alignment than just like overcoming some obstacle like a regulation. So yeah, that's like a complete shift from the perspective. And yeah, since we covered like the regulation, I want to move further and given that we have like regulation covered, regulation in place. So the question to Anastasia, from the technology provider side. So when companies are entering the markets, what are the key blockers for the during this execution of the launch?
I wouldn't say there are blockers if you pre-plan accordingly, but there are steps you have to fulfill and achieve in order to get where you're planning. So you have to start with the license. You have to understand what acquiring partners you're planning to onboard, what APMs, what wallets, anything else, alternative payment methods, BNPL you're going to enable for your merchants. You have to integrate all of them. So by the time you have to have the platform where you're going to integrate that, this platform has to be set up within the country, usually in almost all of the MENA market countries. So installation locally, you have to choose your cloud provider or bare metal provider, set it up, receive PCI DSS on your company, because you have to be compliant. By the time you already have to receive your license and start building those integrations, or if you're using white label, basically prepare in advance, but by pre-building them, but also by the time they're done, you have to have MIDs open there in order to test and see that everything is working fine. And after that, you are bound to success, because you have at least 2+ providers, acquiring providers, because you also have to maintain and make sure that you're going to have stable processing, reliable. You'll be able to do routing based on specific rules you have in mind to guarantee high approval ratios. You have to set up cascading, because if you are losing transactions, your merchant is losing money and you're losing your payments basically as well. So you have to make sure that you pre-plan all of that. You are making it available for different APMs to be used on the platform. The payment page should be user-friendly, compliant, but user-friendly for your merchants to choose whatever options they prefer for the payers, and to enable stability and approval and acceptance transactions. After that, you have to make sure that you have ability either in the platform or somehow outside of the platform to set up your billing. So to calculate how much you're supposed to pay to your merchants, how much is your commission, how much are you making, how much you can spend on this and that. And you have to have reliable anti-fraud, because you have to protect yourself from the friendly or not friendly fraud. You can use either logics like criteria-based logic, so block any transaction after the third successful attempt from a card a day. That's just an example. Or you can also use AI by understanding, like, there's different companies that are specializing specifically on anti-fraud, and they have a lot of tools to help you protect yourself. So just understand what kind of industries the merchants are working with, because anti-fraud will be very different based on that, based on how you should prepare yourself and your platform to protect your acquiring channels and your merchants from unwanted traffic.
Well, yeah, thanks for covering this as well. And now I want to ask Georges as well. Like, when we launched already, what are merchants care about most?
See, in one of the incidents where when I was mentoring one of the startup founders, he was always telling me, George, it's very important to prove to my merchants that my technology is state of the art. And I told this gentleman, I told him, listen, based on my experience, I strongly believe that 99% of the merchants care less about your infrastructure. What they care most and what they care really about is, number one, reliability, credibility, speed, support, brand trust. And then if you want to do it the right way, then you should make sure that there is a strong customer support from your end as a fintech service provider to build loyalty with your client. And then building this loyalty, you have to be always responsive, because responsiveness is very critical for merchant. So again, let's take the example of TESS. So we're a startup, and our name is not, or probably our brand is not that much seen in the market, because we're focused on two things. Number one, we're focused on delivering the right solution to our client, and then number two, meeting the expectation of our clients. However, if you look into the competition, for example, we compete head-to-head with Qatar National Bank. So imagine a startup within the Qatari ecosystem is competing with one of the leading commercial banks, not only in Qatar, but across the region. So they're doing payment gateway, and then we're doing payment gateway. We hunt for the same client base, or for the same clientele. So imagine if you're a client and then having two offers, somehow identical offers. Expect the commercial side, and then you have the option to deal with a very reputed publicly listed bank that represents the state of Qatar, and a startup that exists since maybe 8 years. So which option you will choose? So imagine how tough is our mandate in meeting what the merchant wants, again, in terms of speed, in terms of support, in terms of building the trust in the brand itself. Because if these three criterias are met, then once the merchant is onboarded, consider it as a lifetime marriage. And this is the differentiator. So you need to do lots of pre-onboarding exercises and highlighting the value proposition, not the tech value proposition, but about the overall offering in general, in order to win and build the trust with the merchant. And then, in our case, why we decided to go ahead, for example, with the Akurateco solution, because the common belief across the board of TESS was let's do the co-building. Let's avoid spending lots of time and then efforts in order to build our own technology, whereby when we decided to go ahead with Akurateco, another startup whom I know very well, they exist, they're licensed by the central bank, decided to spend immense amount of time in building their own technology. And they exist, and they're one of the prominent startups. But the difference now is that in the case of TESS, we processed already in 2025 and 2024 approximately 2 million transactions. Our volume hit $1.5 billion, whereby the other startups didn't even achieve 50% of what TESS has achieved. Because the time to market entry is very essential. So if you trust your technology, you can focus on the merchant onboarding. If you are 100% sure that this technology is in full compliance with the central bank regulation, from InfoSec perspective, from data residency perspective, from all the perspective, then you can go and then focus on growing your clientele base, and then perform more and more partnership and more use cases, and then maybe POCs with potential clients. So this is the difference here. Again, to your point, Kate, the message here to conclude is that merchants care about a long-lasting professional relationship with the payment gateway service provider, where responsiveness of this entity or the payment gateway representative sits on the top of anything else.
Well, thanks a lot, like for these thoughts, and it's really interesting to reflect that how like technology correlates with trust in the end. So like and how this like backend that no one sees is actually influences like the end user. And so yeah, and I want to also ask you like this follow-up question, like when we like to move further again, when we covered like the regulation, when we took care about the key like trust building exercises, and we established like some market position in the market. When we talk about like growing further and scaling, what are like key things here? And so yeah, what are your like in general, what are your reflections on scaling with the like technology provider?
Thanks, Kate. Indeed, this is a very important question, because at the end of the day, fintech is all about scaling. So you cannot build a fintech company in a specific jurisdictions, whether in MENA or abroad, and then keep it limited to this jurisdiction. At the end of the day, for the fintech journey to be well achieved, there is an expansion element, and then without this expansion, then the mandate won't be 100% achieved. So since we're covering MENAs today, it's very important for payment service providers to perform proof of concept with champions. And then when we talk about champions, we talk definitely about financial institutions, ideally banks. And then in the case of the banks, it could be conventional banks or Islamic banks. And then also telcos. And the opportunity with telco nowadays is very important. And especially if a telco in a specific jurisdiction operates in other jurisdictions. So once your payment gateway or your payment solution becomes embedded within a bank or within a telco company, then the opportunity to take your solution with this telco or with this bank abroad is definitely much higher. So the opportunity to grow in a very organic way is definitely much higher. And then since we're shedding the light on this expansion, so the partnerships in this case are very much important, or are just important as ownership. So many fintech loses time and efforts and then focus on building the technology without knowing why I need to build technology, whereby someone else decide to leverage on an existing technology
and then probably accommodating this technology within its stack, and then go all the way towards unlocking strategic partnerships, whether with banks or with telco or with maybe airlines. And then in our MENA region, there are prominent telcos, whether in Qatar or in UAE or in Saudi Arabia, and then all of them has this fintech expansion focus, and then the opportunity is still there till now as we speak for many fintechs. So if you take the example of Saudi Arabia, STC is one of the champion there. In Qatar, you have Ooredoo. In UAE, you have Do, so on and so forth. So it's very important for the fintech founders to keep what we're just discussing in their mind, and then to put it on their agenda immediately. And then whoever did not reach those champions, to understand what are the potential use cases that can be explored, that it's time to go and then do this outreach. And then this, to be honest with you, can be 100% coordinated with the regulatory agenda of central banks. And then why? Central banks, for example, has two supervision mandates. You know, when you go into a licensing phase, then you end up dealing with the licensing team. And then once you get your PSP license, you will be under the supervision team, custodianship and monitoring. And then at the same central bank, there is another supervision team who oversee the financial institution and the banks. And the telcos, if they are also subject to regulations. And then, for example, in Qatar, both Vodafone and Ooredoo has their own e-money wallets, and then they have their own licensing and licenses from Qatar Central Bank. So the regulator is always keen to push forward and monitor the digital transformation strategies of all the banks operating in a specific ecosystem. And the same applies to telcos. And then maybe other institutions, let's say airlines, if they have a payment agenda or if they have a fintech agenda. So who is the custodian of all these digital transformation strategy at the end of the day? Who has an eye on what's in those digital transformation strategies? So for example, in the case of Qatar, there are around, let's say, 8 regulated local banks, and then each bank must submit a 5-year digital transformation strategy. So the custodian, the aggregator of all these digital transformation strategy is the central bank. And then here where the opportunity lies. So the central bank, in coordination with ecosystem stakeholders, whether banks or sector developer and licensing platforms like QFC, can always identify at least 1 or 2 proof of concept per bank, or 1 or 2 proof of concept per telco. And then these proof of concept are use cases in a nutshell for fintech founders and fintech startups to explore and then bid for and then present probably the ultimate solution to unlock them and land on these use cases. So, and then on the other sides, the banks and the telcos probably move fast, because if the POC is there, then we're talking about a potential new revenue stream. So there is an opportunity definitely for the startup, but probably the opportunity can be secured if the technology is there. And then in this case specifically, as founders, we don't have time to put all our efforts on designing and building the technology. So if someone has this technology, then the partnership is the right way and is the shortest way to get there and then land on this opportunity.
Absolutely agree. Time to market is currently super crucial. Without it, other companies are winning and you're just basically stuck building some technology you're not even sure will be of use at some point. So totally agree. From my point of view, in terms of scaling, I would differentiate it in terms of scaling within the market by getting more merchants and scaling transaction quantities. and the other one when you go to other markets and conquer there as well. So there's different kind of directions for scaling from a technology point of view. So both ways, with the scaling with merchant and transaction quantities, you have to remember that once you grow, your infrastructure has to also grow with you. So you have to have more data centers, more DR also to support your growth and your availability and stability. Once you grow to other markets and scale there, you have to have a plan of setting up there locally. And same way, every time you're going to a new market, it will be the same flow. New regulator, new license, new local setup, PCI DSS there, make sure you're compliant with all the rules regulators, and onboard local providers there in order to prepare your scale. So it's organic and natural.
Well, thanks a lot for your thoughts on that. So, yeah, again, we circle back to the regulation side, and we covered like that's important and is inspiring as well. That again to look at it as an enabler. And I guess another takeaway from here is to consider the right technological partner from the very beginning, because when you scale, you will not have to deal with this tech debt, yes, and you will be able to scale. And again, taking into consideration like partnering with local players and central banks, yeah, you will still have like this backbone that supports you. And so yeah, and in case of like collaboration with TESS, it was Akurateco. And yeah, so I guess that the scaling is a completely different topic, and we can discuss it like for it's a topic for another webinar. Yeah, and since we are a bit limited in time, I want to give you like a time for closing remarks, and after that we will have 10 minutes for a Q&A session. So if any of you have any questions, please feel free to put them in this question box. And so yeah, so now we can move. I can give you guys a stage for the closing remarks, and yeah, so any of you can start. So yeah.
Anna, ladies first.
Thank you. If I have to highlight the most important things, I would start with that MENA in general is a very fast growing market, very lucrative, very interesting, but it's not emerging anymore. So if you want to grow there or target MENA, you have to do it fast. It's so dynamic, it's open to innovations and eager for technologies. So they are ready for whatever idea you have in mind, but you have to start now. And if you will wait to develop some technology and you think that you have 5 years more, you don't. You have to start now. You have to be flexible. You have to build strong partnerships. You have to understand local specifics, their requirements, their expectations, their regulatory framework. So you have to prepare yourself if you want to be successful there. You have to build for change and go market by market. No way you can conquer the whole market in one day or even 1 year. It just will take you so much time to conquer one by one. But once you do the first part, the first market, it will be easier because you will have this plan. You will have this backbone of the steps you've taken. You'll have your infrastructure already in place. You will have your merchants. And with those merchants, maybe they are also targeting other markets and you can help them grow there. And with their volumes, it will be easier for you to build relationships with those acquiring banks, acquiring channels, by showing this volumes you can bring them. Just will be easier way in for you. Infrastructure has to help you grow, not hold you back. So make sure that whatever you're going to use, it will be able to cover your growth in other markets with the functionality, with the features, with whatever expected there, you will have it on board as well. And stability, of course, because SLA, people are not thinking about it, but it's very important. If your platform is not working and you cannot process transactions, then what's the point in you at all? They cannot trust you. And always have an understanding of how you're going to set up your logic for different channels from the perspective of pre-routing, routing, and then cascading. I mean orchestration layer. It's a trendy word that's becoming more and more popular within the past couple of years, but by now it is an essential thing without which you is not able to grow. Because you have to show your merchants that then by getting you as a startup, as a PSP, or as a future acquirer, you can provide them not just one option and one connection, but a sequence of other options and methods they can use if the first is not working, if the second is not working, but they will not lose their transactions, they will not lose their money. So I would say this is the most important things.
Great, very interesting. Thank you so much, Anna. Kate, to your point, thanks for giving us this opportunity again to share some very important reflections. And then what I'm gonna reveal now is really based on the past 25 experience, since I've enjoyed probably approximately 2.5 decades of hard and smart work here in Qatar. So probably if I look into the MENA expansion, if let's say if I'm a European fintech or I'm a European tech company and I want to approach MENA, or if someone who's based in the Southeast Asia and then wants to approach MENA, in my humble opinion, and then based on all the experiences which I have accumulated over the past years, there are 3 approaches. The number one, which is very common, is FDI, foreign direct investment. So I approach the regulators, the stakeholders, and I tell them and I share my plans on how and then why I need to approach. And then probably the appetite here is the amount that's going to be invested in specific jurisdiction within MENA. So this is like a typical approach that many jurisdictions are welcoming these days. But of course, the jurisdictions which are quite healthy, they look at it, but they don't prioritize this approach. The second approach, especially if we're talking about tech enablement, is to consider the know-how transfer approach. And this is very important, okay? Because especially when it comes to the regulator, because this is what the regulator wants, since we discussed a while ago about how important are these regulatory framework in unlocking and enabling innovation. So if I will be able to convince the regulator that my approach is purely based on know-how transfer, then my opportunity to access this market will definitely be higher. So this is something that should be always in the minds of many companies who are very much keen, especially nowadays, to approach probably the MENA in a nutshell, or certain and specific jurisdictions within Middle East and North Africa. And the third approach is technology localization. So definitely it's somehow linked to the know-how transfer, but a know-how transfer can be transferred without being localized. So if you focus on the know-how transfer and the localization of this technology within the jurisdiction, then even the chances to succeed and then be regulated in a shorter period of time is definitely an option for MENA expansion. And then last but not least, a very important element is considering the right partnership. And then I've been into association with many fintech companies and then even fintech unicorns who have managed to have presence in more than 50 countries, maybe 60 plus countries in the past couple of years. Their approach was always to go and then unlock these countries as 100% foreign ownership company. However, when it comes to the Middle East, I believe the situation, and I strongly believe that the situation is quite different, especially if you want to approach the Gulf region. We're talking about definitely Oman, Qatar, Saudi Arabia, UAE, Kuwait, and Bahrain. So having a local partner on ground who perfectly understands the ecosystem is definitely the key to success. Otherwise, you're going to spend an immense amount of time educating yourself about this specific jurisdiction, what could go right, what could go wrong, and then probably understanding more and more the mindset of
your potential clients, of the regulators, the other stakeholders, so on and so forth. However, if you adopt this know-how transfer, which is backed by technology localization and local partnership in a specific jurisdiction or in a specific country, then you've met so far the most three elements that will probably turn successful on your business model, because you will come at the end of the day with one of the top-notch, one of the best business model that perfectly serve a market gap. But if you don't strike these three elements, then it will take lots of time in order to adhere and then be integratable within the jurisdiction.
Thanks a lot for this insightful discussion, and I really hope that some of the listeners will find this and useful for their real practice, and they can avoid some mistakes. And if again from the technological side, you can always approach Akurateco, and we can answer all the questions. Let's so we've covered market fragmentation, regulations, infrastructure, scaling strategies, and now I think we can open the floor to questions. And so the first question is from our listeners is which country or countries in MENA region do you recommend as an entry point, and for what reasons? I believe both of you can answer. Maybe George as a representative of the local market.
Yes, thanks, Kate. I guess it's a very interesting question, but also it's a very wide question. Anyways, without knowing the solution, we cannot recommend a specific country. However, if the solution is a B2B solution, then you need to focus on a market where you can easily do businesses with champion, right? So, and then I can elaborate in some time on what does B2B mean exactly. If the solution is B2C, then definitely go to Saudi Arabia versus Qatar. Why? Because the population in Saudi Arabia is 40+ million, and the population in Qatar is 3 million. And then since we highlighted the B2B opportunity, then it can be, for example, deployed or integratable with market champions. So for example, in Qatar, you can go directly to banks, because the banks are quite large, and their brands are always valued. Or maybe to a market like UAE. However, the competition in UAE is quite tough comparing to Qatar and in Saudi Arabia, since the market over there and the regulation over there is quite advanced comparing to us. And I'm being realistic in this. So since this question is quite general, then you need to provide more insights on the nature of your business model in order, maybe we can take it off record after the webinar, in order to give you the right advice.
But from the regulatory perspective, purely, let's say you're a PSP and trying to find the easiest license to get in the region, I would say UAE would be easier. But absolutely, the competition is crazy high. So unless you're bringing something of value, like unique proposition or unique product for a very specific vertical of the market, then only then I would suggest UAE is the easiest option to get in.
Okay, we have actually we have many questions, so I suggest to speed up. And the second question is how important do you consider third-party system to the success for fintech payment providers with regards to the core banking system, APIs, models, and do you recommend any systems, or would you advise against using specific systems or solutions?
I would say this question is also a bit broad, but to begin with, you need to understand what exactly you're trying to achieve. Are you planning to offer a loan service, or are you planning to become an acquirer, or you're a PSP, or you're micro lending? What exactly business you're planning to have? Then once you have the clear understanding, or maybe you want to do it all, but just don't do it all in the same time. So do step by step. Then you have to round it up to at least 3 providers that can cover that from the technology point of view. Using third-party solution here would be an asset for you, because then you can get to the market faster. But you need to evaluate if those 3 providers that you've chosen will cover that for you. You check what exactly functionality they have that you want. If they don't have something, are they willing to add it? Or if something that they have is just not a bit localized in terms of mindset of what clients are expecting there. So they have to be willing to customize and build on top, and it doesn't have to cost you a fortune. It has to be affordable. And comparing the prices, how fast they can develop, how fast they can enable and brand the system for you, and if they can cover local setup, and if they can basically support you on this process.
Great, thanks. So,
Recommending specific companies, I would not, because there's so many international and local companies you can choose from. So just start with understanding what are your criteria for those companies and do a high-level overview. After choosing those 3, you will decide your best option out of them.
Okay, and so the next question, could you please talk a bit more about cross-border payments? Even though each country is a different, like regulatory-wise, they exchange between each other. So the listener was wondering, what opportunity do you see in this regard, not only in B2C, but also B2B?
George, maybe you can reply to this one.
Yes, thanks, Anna. Thanks, Kate. This is indeed a very important question. So cross-border payment is a hot topic. And then there are different elements to it, especially when it comes to the remittance, to the remittance side of it, whether direct or indirect remittances. So we've seen an ocean where many telcos adopted their e-money. So, for example, this is the case talking about Qatar and then maybe Saudi Arabia. This is the case of Ooredoo, iPay by Vodafone, and then STC Pay, where many remittances, direct remittances, are taking place or probably by leveraging on the value proposition and the regulatory framework of these e-money wallets. However, from a regulatory perspective, I believe the regulators across the region, at least at the Gulf level region, talking about the 6 Gulf states between Oman, Saudi Arabia, Qatar, Bahrain, Kuwait, and UAE, there is a notion at that level to have a payment scheme whereby the cross-border payment move can take place through this scheme where, to be very honest and blunt here, where less reliance will be on the likes of Visa and MasterCard. And this is something that we're very passionate to see evolving as far as we go on into this journey. But definitely the regulatory framework for such an initiative is going to take some time. And then definitely the infrastructure here and the technology play a vital role in making it successful.
Well, thanks a lot. So we have like more questions, but unfortunately we're limited in time. So if you want to ask questions to Anastasia, yes, please feel free to reach out to her. As her contacts are on the screen, and so. I believe that George are also open to the conversations. And so, yeah, thanks a lot for you all for listening. And thanks our wonderful speakers for delivering these insights. And again, I hope you can use it in practice. And again, thanks for your time. And yeah, to the next time.
Thank you so much. Thank you, George. Thank you, Kate.
Thanks.
Thank you. Appreciate it.
Thank you.
Looking forward. Have a good day.
Have a good day. Bye.